This has nothing to do with what we're going to talk about today, but my friend Shelby is struggling with YouTube, and so I wanted to make something really awesome to make her feel bad. Inflation, inflation, inflation. It's one of those popular things to talk about these days, and just like Bitcoin, everyone with a pulse has a narrative opinion about what's going on, but they have no idea what they're talking about, except me. Obviously. In this video, I'm going to tell you what I think are the 3 most likely outcomes from this inflationary period. And I want to have this all on video so that I have some skin in the game. That way I can collect bragging rights when I'm inevitably proven correct. And for those that don't agree with my predictions, great. Watch the whole thing and then let's argue for a long time. Inflation is an increase of the money supply, which creates a decrease in the value of said money. The central banks manage our money supply by printing cash and buying assets, namely bonds. When they flood the economy with cash or bond purchases, the cash you currently have loses its value because there's so much more. Inflation sort of acts like a hidden tax in your money. Each year, the same amount of money buys you a little bit less of the same amount of goods. For the past 25 years, our inflation target rate has been about 2%. We've stayed between 2 and 4%, but in 2021, the inflation rate jumped to over 6%, and that's why it's been in the news so much. Your money is losing value faster than ever before in our lifetimes. The federal government has said that this wasn't going to be a problem. Then they said it was going to be a temporary problem. Now they're saying it might not be so temporary. Whatever upbeat thing they're needing to say to get through the news cycle doesn't really matter. For now, it's just important to know that the people who are in charge are not as competent as one would hope. Here are some risks that I know to be true. Everything in economics and politics is cyclical and has been happening the same way over and over again since the dawn of currency and civilization, because all of it is run by humans and humans haven't changed a lick. We like to tell ourselves fancy stories about why our new systems are more sophisticated than our past systems or why we have control of the economy this time, but that's all just fancy self-deception. People run cultures in this very cyclical manner, and they inevitably run them into ruin, and we very well may be running ours into ruin right now. Second, I know that the US will not be the world's reserve currency or the leading economic power forever. It's common American exceptionalism to assume that we are destined to be this great economic power and will always be number one, but recorded human history is like 5,000 years old, and the US has only held its current economic power since around 1945. 80 years. In terms of historical significance, it's an unmentionable blip, and statistically our reign is likely to be at the end of said blip. The last thing I know, while not common knowledge, is something you do need to know. The 2 things that sink economies and sometimes entire civilizations are debt and inflation. Small amounts of inflation and debt are useful. We've had inflationary periods in the US before, and it's mostly fine. It's what things that get abused that they go south, and they always get abused inevitably. This time, I think things are different because it is being abused. Before we called what we call now inflation, it was called debasement of currency. A king would manipulate the money supply by mixing gold coins in with less valuable metals, which would increase the money supply so they could fund big projects. But when you do this long enough, the money becomes so worthless that you have to abandon the currency completely. Now we just print money, but the effect is the same. Debt is an equally tough to manage tool because it's so valuable when used wisely, but people will eventually overdo it, and there's a long history of suffering thanks to irresponsible usage of debt. Most importantly for this video, I'm speaking specifically about federal debt and deficit, which is at a record high in terms of total dollars and as a percentage of our total country income. To summarize, humans and economies are cyclical, and everyone who's on top eventually runs it in the ground, and it sort of seems like we are at the end of an epic good 80-year run, because the 2 things that end good economic cycles and currency cycles are debt and inflation, both of which are sounding the alarm and blinking red right now. So my predictions, I'll go over them in terms of least to most likely. And the least likely is that the Fed raises rates fast and they stop buying bonds like they should have 4 years ago, and the economy continues to grow. The Fed has announced that they will stop the quantitative easing, a fancy word for bond buying, which causes inflation, and they will raise rates 3 times this year. And then more after that. This is a prudent and responsible thing to have happen. The Fed needs tools to combat economic downturns, and they have just two: lowering rates and buying bonds. And they have maxed both of them out for the last 12 years, so easing off that policy will give them some leeway to use them when they actually need them. The reason that this is least likely is because they already did it. They tried in 2017 and it failed pitifully. When the rates come up, the economy will slow. That's just basic economics. It's a subsidy. Cheap rates are a subsidy. And when you present a person with a subsidy, they will take it. I know people who will rail hardcore for days against all government subsidies, but when you present them with Social Security or VA disability or a Fannie Mae mortgage or PPP or EIDL loans or stimulus checks, whatever it is, they will do mental gymnastics, whatever they have to do to justify why they deserve it. If the interest rate subsidy stops, people will take fewer loans and the movement of money will slow. Problem is, no politician or government official wants to be in that position, no matter how responsible and necessary the policy is. They only want to take wins. And when they raise rates and the economic gain starts to slow or reverse, they're going to get torched. And so it's literally easier for them to retire and just leave the next guy to take the hit, or let the whole thing blow up and act surprised afterwards. It definitely seems like they're going to raise rates 75 or 100 basis points in the near future, but the federal funds rate is 0%, so I just don't see them being very aggressive. And if they are going to be aggressive, it's going to hurt the economy badly. Which is why what's most medium likely is the Fed successfully raises rates 5 or 6% over the next few years, keeps them there, they stop the bond buying, the government stops its absurd debt spending, the economy tightens up, and we go into a crunch, like a decade-long crunch. The inflation that's coming will continue to devalue the currency and increase the cost of goods and services beyond organic growth of production, which means the people's expenses are going to rise faster than their income or the returns on their investments, and people are going to get squeezed from the bottom. Although this is not fun to hear, in all reality, this is sort of the best possible outcome. The inflation is going to get worse, for sure. And the debt problem we already have. And both of these things mean that we have been spending tomorrow's dollars today, and tomorrow is here. Like any debt, we now have to live with less and spend less so we can pay down the debt. That's how debt works. The problem with this outcome is that the government would have to stop spending money and the Fed would have to stick to raising rates, and both would have to continue to do so as the economy got worse. So, do you live in America? Sacrifice and responsibility ain't really our strong suit. Entitlement is more of our thing. Which leads us to what's most likely. The Fed will continue to do what it's done for the last 12 years, subsidizing the economy and pretending that everything is fine. The Fed might raise rates this year, but when they do, the loan defaults are going to rush in. Economic growth is going to halt. They are going to get crushed in the news. They will promptly drop the rates back to zero. They'll keep printing that money. They'll keep buying bonds. The government will continue to spend debt into oblivion, and we will devalue our money until the US dollar is no longer the global reserve currency. I've said before that we've had inflation in the past, but if this happens like I think it will, the results won't be like before. The result will be severe economic contraction, political instability, and potentially geopolitical consequences. This isn't a long shot. This is basically inevitable. The only really question is when. What to do with this information? The interesting thing about these cycles is that they've been happening since the dawn of civilization, so none of this is a secret or new information, but the cycles move really slowly, so they aren't obvious. The big cycles are like 100 years or longer, a little longer, which is why most people are always surprised when they happen, because it only usually happens to people once in their lifetime. So it's always a surprise to them, to us, to me. So unless you're reading a ton of history, like I do, then you would never know that this is a thing, but it is definitely a thing. These long timelines also make the future extremely hard to predict to specificity. You know that it's gonna happen, it's just hard to say exactly when. But just like I can give you warnings based on history, we can extract some wisdom on how to behave from it as well. First, Paranoia is better than blind optimism. There's an old saying that if you're worried, then you have nothing to worry about. And if you're not worried, then you're screwed. There'll always be money to make, but if your plan is to just blindly play the game the same way that it's been played for the last decade and assume everything will go to the moon, then you are going to be for a sad day. Second, getting fixed rate debt is actually probably a good play. In many respects, debt is what's going to sink us as a nation, certainly in the long term, but fixed rate debt for an individual is going to gain a premium in value in the short run. Why? Because you're gonna have more cash. And while it will be less valuable against goods and services in the market, the fixed rate debt service is gonna stay the exact same amount, making it easier to pay that down. And you're gonna have all this new cash money. Plus, rates are dirt cheap right now, and they will be for a while, especially if they don't raise rates like I don't think they will. So it makes this actually super appealing. The other thing I recommend is keeping high reserves. Yeah, the value of money is going to tank and people are going to tell you to get out of cash, but liquid capital is going to fix problems faster than anything else, and bigger problems are on the horizon. I just told you to get debt, right? Do not go out there and get debt and then hold no cash. That's a terrible strategy. Cash might be a bad investment, but it's going to be a super valuable safety net. Next, learn as much as you can about macroeconomics. Knowledge is the greatest risk mitigator of all. The reason everyone has done so well in the real estate in the last decade is these rate subsidies, and they might continue, but lots of people don't even realize this. So if the rates go up or the economy slows, people are gonna find out just how good they really are and how much they were benefiting from the tailwind. Lastly, I recommend you live light as you can. The chances that living expenses are going to rise is high. Car prices are up, food prices are up, and more is probably coming. The last thing you want to do right now is go out and get some fancy stuff and start living large only to have your flashy lifestyle take you out. When you're at the top of the market, you retract. When you're at the bottom of the market, you expand. Okay, that's all I got for inflation. Remember this video so you can put it in your calendar and watch it again in 12 months and see if I'm right, which I 100% am going to be right. And I want you to remind me. Also, go to Shelby's YouTube channel and tell her how much better mine looks than hers. That would actually help me out a lot. Thank you for watching. Leave a comment, subscribe to the channel. I'll see you for the next one.